Welcome to the Stewart Squared podcast. Got another great episode, not really planned, but we did a little conversation beforehand about what will potentially come up. But we reserve the right at any moment to go off on random tangents, which will hopefully are valuable to you, the listener. So there's something we can talk about between Claude and Anthropic. Claude just did a passive aggressive move to turn off all of their models to OpenAI employees because
I wouldn't call it passive aggressive. It was pretty actively aggressive.
It was active aggressive. Interesting. Well, that's a whole other question. Like, what is the difference between passive aggressive and active aggression? And what are the examples of that throughout the history of the personal computing industry?
We haven't even established what we're talking about, so let's not drift away yet.
So the other one is management and investors. I'm reading a great book, History of Profit, I think it's named, that goes step by step through the first corporation that ever existed was in Rome, Societas Publicum. And they actually helped Romans defeat Carthage when Hannibal took his elephants over the Alps. The Roman corporate owners, who were not the same as the senators, they were specifically, the senators were not allowed to become owners in corporations, but the senators looked to the corporation to help them from the invading elephants. And so they helped save the Roman state, and then after that became sort of integral to it. And so I'm reading this great book, and it just was talking about the East India Company, and it was talking about management and investors. For some reason, the investors don't get involved with management, and the managers aren't necessarily the same people as the investors. And this is the whole thing. This is why we have corporations for some reason, is to separate out those duties. And I'm wondering, where did that show up in your history, and what are your thoughts on that?
Wow. It's interesting, the idea of investors and management being different was the original idea behind forming a corporation, and the corporation would be the entity that's, gives you a way to separate the investors and management. Is now formalized, at least in the U.S., as the investors have preferred shares, and employees have common shares, and anybody can own common, but preferred, you have to supply cash to buy them, and then you get preferences, you get rights as a result as an investor. So this kind of looks like the generic way of defining what a corporation is, which is an entity which can hold both employees and
Interesting.
investors.
What does a preferred share do? Why do you want preferred shares? Do you want preferred shares? What's the stuff there?
We as a venture capital firm only buy preferred shares in our initial investment. We've also bought common shares as a way to supplement our ownership. But the word preferred is descriptive. It's you have preferences. So if the company gets sold, you get to get your money first, which leads to the concept of a preference stack, which is over multiple rounds of financing. People pay different prices for the shares and buy particular kinds of rights. So if you're a Series seed investor, you pay X and you get the right to get the money before the common shareholders. But if then the Series A comes along, there has to be a relationship between the different types of preferred shares and what their preferences are. It gets pretty complicated after that, but that's the basic idea.
So in the beginning, it's like just very simple. Let's tie this back to the history. It's just like a couple of guys come together and we're like, oh, I want to send boats to India and go, get opium and send it to China, which I think our family might have an interesting story there because the Americans got in with the British for that. But you're starting the small company. You're like, okay, these guys, let's just do this. You don't really think too much about it. But then somewhere around Series A, it's like, oh, this is serious, and then sophisticated.
This is in the venture capital world. There's a whole other world that does not include venture capital. Venture capital is still a minority of investment in companies. So there are some people that have started companies as LLCs, limited liability corporations, companies, which does not provide for shareholding. Instead, you get an interest in the profit of the company.
So
There are
this
still
this
very large companies that are still LLCs because they have a single shareholder. And
and, well,
so there's no
and they can be
concept of preference and
so
a
there can
different
be
way of organizing a company.
well, and this goes right back to what I just said about the difference between the Roman Societas Publicum and the British shareholders, because what you just described was invented by the British in this really great story. But the Romans had the partnerships and they had the LLC because what the Romans were trying to do was set up a separate body that could be treated as an individual that would transcend the humans inside of that body and would continue on
Yeah.
after death. Now, the British were were sending off ships to India, and they got kicked out of Indonesia by the Dutch, and so the British were like sending ships in these corporations, and the ship owners and the managers of the ships were incentivized only for their specific boat. So they would start to fight other boats. And it was horrible incentives. So then the British were like, oh, we have to solve this problem. How do we solve this problem? We build a corporation and we give investors and we separate out the investors from the management.
Okay. Good. There
So
wasn't any question in there, but
so preferred versus common shares. We've got investors who come together. We've got investors and startups. How much of it is, how much conflict is, and maybe we could talk about this when you started getting invested in 1997, how much conflict is there between the different layers of investors? So you've got your seed investors who come in early, and then once the Series A comes in, it's like, oh, okay, this is getting serious. It feels like that's where the sophistication is required in terms of investing, is when into the scale up, right?
uh, these are labels, series, pre-seed, series, seed, series A, B, C, D, E, and F. I've seen all of them. Um, the more there are, the more complicated it gets. And that's not necessarily because the company is doing better. The company might do better for a while and then start not doing so good, and then it has to raise money and uh, to down rounds, or so there's always this negotiation between existing investors and new investors. There are no new investors if you don't have a business that's actually worth investing in. So generally speaking, there's a split between companies that are doing really well and companies that aren't doing so well. And there are different conditions. You may have noticed that Figma went public on Thursday. And this is a company that Adobe had proposed to buy, but the regulators said they couldn't because it would have reduced competition in
Hmm.
the whatever. Um, so Adobe had to not buy Figma, and Figma had to figure out how to go ahead as an independent company. Turns out they were actually doing pretty well anyway, and they didn't really need to sell to Adobe. So they kept doing better, and then they went public. And in a market that people are going like, yeah, companies can't go public, and then boom,
It's
they
back.
go public at $33 a share, and it's like 120 now, 2 days later.
The party's back
And
on.
yeah, well, that's what they're all saying, but everybody overreacts to good news and bad news. So we'll see. One does not make a pattern. Um, so maybe, now everybody has canceled their offerings is coming back and going, now we can go public. And it's like, nah, it's not how you're supposed to do it. How Figment did it is how you're supposed to do it, which is you create a business that's doing really well and has a lot of promise in the future, and everybody gets excited about it. So uh, in the case of Figma, if I read correctly, there was a Series A, B, C, D, and maybe E. There were multiple rounds of financing. And when it went public, it was at an up round from where the last financing was. So everybody was in the money, so to speak. Right? There were no, all the preferences got paid off and common got valued, because when you go public, you convert everything to common. And so the earliest investors made a ton of money for a very small investment. The later investors are making money, could make money if they can sell. They're usually locked up. The major investors who can't sell for 6 months. And um, so everything's looking rosy, peachy keen. That's ideal.
Yeah. Yeah.
So all the issues that appear because um, the company's not doing as well as it was hoped to. And that's why you have preferences, and that's why you have these structures between different series, because people are investing based on what they perceive the current state of the company and the potential is. And if that is not what it was supposed to be, then everybody's like, fighting with each other.
What do you mean by it was not supposed to be?
Well, you invest thinking something, usually positive, right? You don't really invest if it's just garbage.
Yeah.
So you invest because you think something will happen, and if something doesn't happen, then all the terms you put into your investment um, come to become effective. Right? So then all the different shareholders are competing with each other, and the game goes to those who have money to protect themselves. Um,
Because follow on because of dilution. Is that right?
well, dilution isn't the only game, but if you have to go through a down valuation, usually you get converted. You lose your preferences if you don't play, and if you don't
Oh.
have cash, you can't play.
Oh.
That's why it's called a pay to play. Um, that's ugly. That's you know this has happened in our good companies and our bad companies, but it's because partially it's also what do people think. Like right now, space is hotter than shit, so people are throwing money at space companies. I mean, real literally, there are companies where you're going like, exactly why are they raising money?
Ooh,
Um,
interesting.
and this happened previously, like 10 years ago when space got hot the first time. Um, So that there's always the environment. Right? So is this something people are into? If you're not in that space, like AI or space or defense at this point, um, then people look at it and go, "Yeah, I don't want to invest in that because it's too risky." I mean, this is all perception. There's no book. There are lots of books, but none of the books are
Or
definitive.
useful or good. And it's because of a perception, and it's the different. And I love what you've done with your career is that because it's very hard tech, deep tech, things that are very practical. And it's been hard for me to make sense of the last 15 years. And you may remember I started a social media company in 2013 or 2014.
Hmm.
And that social media thing was really interesting because it all has to do with perception. And Facebook did build some deep technology in terms of React, and there are deep technologies within software. But the last 20 years have really been about perception, but speculative perception. Would you agree that it's speculation that was driving the last 20 years rather than
No, not
practical?
really. Meta is worth 1.8 trillion.
Wow.
So whatever you say about Meta, it went from being nothing to being 1.8 trillion.
Mm.
Um, so objectively, it's a very successful company and continues to be successful. Partially because Mark Zuckerberg is terrified of not being successful. So the whole llama thing is fascinating in the super intelligence lab. Because he fell behind. They decided to be open source. They didn't keep up the way that OpenAI and Anthropic have and others. And so they fell behind, and that's like death knell for Mark Zuckerberg to fall behind because
Mm.
he's so competitive. Um, whatever else you might say about him. So um, I lost the thread there.
So I got a bunch of questions. So because when I was referring to Facebook building deep tech, I wasn't meaning to say that they weren't a hard, like
Oh, you
a
were talking about
speculative.
social networks, yeah.
Yeah.
The deep tech actually was, which we have talked about, was Facebook's original deep tech, which they may or may not have understood they were doing, was their ability to update in real time.
Yep.
So your news feed was different than everybody else's, but you it happened very fast, and that's a tough thing to do. Um, synchroniz- Synchronization of data is probably one of the most difficult technology, and still today. And anyway, so I can go off on that. Um, but then Zuckerberg, in his infinite entrepreneurial wisdom, said, social networks are going to run out. So we got to do something else. So let's do VR. So they bought Oculus. And they've spent billions and billions of dollars on VR and AR, um, wanting to be in the lead there. And they are actually in the lead now. It's still not a huge business, so they're still spending billions and billions of dollars on it. And then AI came along after that. So they're also spending billions and billions of dollars on AI, and they've kind of merged it with the Ray-Ban glasses, where AI is embedded in the glasses. You can talk to it, and it talks to you, and it can see what you're seeing. But actually, not the Ray-Bans, but so um, so Zuckerberg's always trying to get ahead of whatever the next thing is, which is a valid thought. Bill Gates tried to do that at Microsoft, and then when he handed it to Ballmer, they lost it. Now they got it back with Satya. Um, Microsoft's worth $4 trillion, um, and there's $1 trillion club. I saw somebody post about, there's a certain number of companies that are now worth more than $1 trillion. Some of which are getting up to between 3 and 4 and above 4,
Wow.
like the whole new standard for valuations. Um, so social networks were a funny phenomenon, because this is kind of what I just wrote in The Death of Social Networks, is slow death social networks, which is, the business started out being fun and exciting because you were sharing stuff with your friends,
Yeah.
and then friending became, and then, went through all these changes, particularly when advertising entered the picture. So Facebook Meta makes a lot of money off its social networks, which it's using to finance its new businesses. Um,
Oh,
so
interesting.
at some level, it knows that the social network thing is going to become less interesting over time. So they're trying to use the money to get into a different business.
Okay.
But you said something about social networks that I was trying to challenge, but we got off track.
Well, no. I mean, that was brilliant. So now now I understand what Facebook is. It's a method for converting human attention into capital that it can then reinvest in its other lines of business. But it's this crazy software product. Have they ever built hardware products? They need, like, they're building the Ray-Bans, but they've never been successful in hardware products, right? They tried with Oculus.
Well, no, Oculus is a successful product for what it is.
Okay.
If they weren't trying to reinvent the whole damn thing, they'd be making money on the Oculus headsets. Because they have an installed base of like somewhere between 5 and 10 million, which is scale. It's not, you know, Apple just sold the 3 billionth iPhone. That's scale. Um, and Ray-Ban glasses are currently in the millions of units as well. So they have these nascent businesses, but they keep spending a lot of money to stay ahead.
Mm.
In the Holy Land would be, they get to hundreds of millions of devices, any one device, where they achieve true scale and can cost reduce. Um, and everybody has to wear them. We're all going to be wearing glasses in the future, even if we don't need glasses, because we want this cool stuff. That's their proposition. Um, and other people agree with it and believe in it. Um, I'm beginning to wonder, but OpenAI, yeah. I mean, you got your little pie thing there, but
Finally
um,
working. My Raspberry Pi.
it's working. Um, the uh, so this is what's cool about the future, is you have to make bets because you don't know exactly how it's going to work.
Mm.
And
Why I remember you probably said this to me offhanded like 10, 15 years ago, probably multiple times, saying, I don't like investing in public markets. I like investing early. Can you talk more if that's true? I know you do invest in public markets, but
I don't actually personally. I have bought some public stocks on behalf of my grandkids.
Yeah.
One
Okay.
of
So
them
you
has
invested for me, and
quite a
you
lot of
invested.
money, and the other
Yeah.
of them doesn't.
Yeah.
It's a random walk. Public investing is a totally random walk, and it's because there's a psychology. Uh, it's a perfect market in an Adam Smith kind of sense because um, you've got millions of people buying stocks and thousands of companies, and whoever's deciding what to do. I mean, meme stocks are really interesting. When people are just buying them because they're going up, and have no idea whether the company is good or not. Um, and that's the way public markets work. And I somehow can't figure that out. Um, if I've ever made money in a stock, it's been a mistake, basically. Um, I claim frequently that I'm the only human being on earth that's managed to lose money on Apple stock twice.
Wait, go into that. Wait,
So
wait, wait. Yeah, yeah. I imagine you never had an opportunity to invest in Apple because, as you told me in the show in the early episodes, probably like to episode 10 or 11, if the listeners want to go check that out. But you told me that Apple never raised a lot of significant venture capital. It was a small amount of venture capital. Did you ever have a opportunity to invest with them? And what was the investment like that
I
then?
wasn't a venture capitalist then, so I couldn't. I was a journalist. I was writing about it, so I couldn't invest in
What
the
you couldn't
company that I'm
invest?
covering.
Oh, interesting.
Product
Oh, interesting. Okay.
conflict of interest in journalism. You don't invest in what you write about. Um, so, and I became a VC in '96 after Apple was well established as a public company. But I bought Apple stock. I could do that. Um, as I said, I bought it twice, and I just got the timing all wrong.
It's like me and
Um,
Ethereum. Um,
yeah, well, I mean, it's like you sit there and you go, like, if I'd bought 100 shares of Apple when it went public, which I probably could have done, it would be suspect because I was a journalist. I probably
mm,
shouldn't be buying Apple stock, but if I bought 100 shares, I'd be much wealthier than I am now, much richer,
mm.
because 100 shares of Apple between then and now, it's like whatever it was worth. If I paid
Hmm.
$100,000 for 100 shares, I probably
Okay.
wouldn't have had to pay that much. I would be having, 100 million, something like that. It's like a huge increase in value. Instead, I bought and I sold and I tried to time the market. It's as everybody tells you, don't do that. That's
Yeah.
not the right way to do it. So now, with my own money, I put it in an index fund at Vanguard, and
Got
that's
it.
good. Vanguard
So
was responsible for deciding what to buy.
when did you first buy Apple stock?
This is so hard to remember. I just have it in my head that I've lost money
Mm,
twice. I don't actually remember the transactions.
hmm. Okay. So
But I do like what I should have done was in 1999 or whenever Steve came back
yeah, got
after
it.
next
Same.
after Apple bought Next. I should have bought Apple shares there. I just said just because of Steve, and I didn't. Right, I was distracted doing something else, and then I felt like I was too late. But it wasn't ever too late until very recently that you could lose money buying Apple.
Wait, wait.
Um,
Very recently, you could lose money buying Apple. Apple's got well
yeah,
significantly
because
down.
Apple's kind of like this right now. Like
Yeah. Okay.
it's not going up,
Yeah.
it's going down a little, up a little, whatever.
And
But it's like
how much of that is the foibles with AI?
uh, it's all a combination of things. I mean, people perceive Apple to be a huge company, incredibly profitable, without really any growth prospect. So the
Yeah.
recent earnings report they just released, they surprised everybody by selling more stuff than everybody expected, including iPhones and including in China. So people are going like, "Wow, Apple did better than we expected." Uh, you know, Whatever. That's a quarter to quarter thing. That's the thing. Don't buy short term. If you do buy short term, then it'll go down and it might go up, and you won't necessarily make a lot of money. But if 20 years ago you bought it and just held on to it, this is the Warren Buffett thing. Buy good companies and hold on to them.
Yeah.
Don't trade.
Yep.
Huh.
But that's
Um,
not but that's not your investing because when you got into investing in 1996, 1997, your investment was I start early before other investors notice
yeah.
it. Why did you choose that rather than why don't you get excited in the Warren Buffett way? Well, I guess it's a combination, right? Because you're holding for a long period of time as well. You're just getting earlier than Buffett.
You had conflicting questions in there. So Warren Buffett buys companies and stocks.
Uh, oh, and he gets on the board.
Berkshire Hathaway, no, he doesn't get on the board. He's on the
Oh,
board of Berkshire Hathaway, but
yeah,
Berkshire Hathaway has like 40 companies.
yeah.
They keep buying companies, right? So Berkshire Hathaway has been making money by buying companies and making a bigger and bigger business. Um, but he also has a lot of cash. So when he has a lot of cash, people are like going, "Ooh, Warren Buffett isn't investing right now." Which he did. He stopped buying stuff about a year or 2 years ago. And now he's sitting pretty on billions of dollars of cash. But he's not going to commit that cash given what's going on because, nobody can figure out himself what Trump's going to do. The Much better to be in cash. Um, 'Cause there's volatility, and we may be on the precipice of a stock market crash because it's been going up and up no matter what happens, tariffs and all that kind of stuff. Wars. Um, it looks a lot like 1929.
Man, okay. So and then AI, it feels like for me, AI does not represent what happened in the last 30 years. It feels like just like Trump, it's a sort of chaos agent that will not lead to clear, predictable understandings of growth up 3%. Do you feel like AI represents a existential threat or a large threat or a small threat to the big tech companies, the trillion-dollar companies? Probably not, right? Because they can own it. But the economics, it's all based on the economics of 10 years from now. What will AI have done today?
So we keep coming back to this, but in tech, what matters is, are you relevant? So for a long time, Microsoft was worth hundreds of billions of dollars and wasn't relevant until Satya figured
Mm,
out how to make it
mm,
relevant. Um,
yeah.
that has an effect on the valuation of the company, but the fact is that that ultimately derives from its fundamentals, revenue and growth and stuff like that. Um, so it's always a mixture of kind of perception and reality that's is what makes it hard to predict. We started these conversations even before we turned it into a podcast, and on the idea that because I've been around a long time, from the personal computer on, I can see patterns that you'd like to understand so that you can apply them to AI.
Mm,
That's true, right? OpenAI is still number one. Their revenue is growing fantastically. They're currently doing a billion a month in revenue. And people just couldn't believe that OpenAI would grow that fast and become
mm,
a $12 billion revenue company for whatever valuation it has. But it does seem to be growing into its older valuations. Anthropic is growing faster than anybody expected. And that's why Zuckerberg is so exercised because they fell behind. He
mm,
doesn't like to fall behind. Um,
mm,
so relevance is what's important. So Zuckerberg's made this big bet by paying people 100 to 300 million over a period of 4 or 5 years to build this super intelligence lab to make them relevant again in AI. So it seems like the patterns are similar, right? It's just the scale is so much bigger. Um, as to whether there's an existential threat to humanity, that debate's going to go on forever until either we don't
oh
exist or we
no,
continue to.
and I didn't mean existential threat. I meant who is going to become the big tech version of IBM in 10 years? Who's going to miss out? Is it going to be Apple? Is it going to be
Well, Apple's business is controlled differently than other people. So it's really an issue of does the iPhone
oh,
uh,
absolutely.
get surpassed, which is
Yeah.
why Meta is trying to build glasses because I think
Yeah,
that'll replace smartphones or anything else. OpenAI itself is building screenless devices. You use AI to be relevant. It's another huge bet. Who knows? I mean, who knows what we're going to look like we're using 10 years from now? I personally think it'll still mostly be smartphone, and I still have to use a computer, right? We
Yeah.
do this to do the podcasting, but
Yeah.
um, and so the relevant thing is more important than results, right? Because it's what engages us and makes us pay attention to what's going on. And OpenAI, I mean, I haven't quite been able to figure this out because they're still all private. Um, Microsoft doesn't report it separately, and so there's no kind of pure play AI results that you can look at and understand what the economics are.
Oh,
What
interesting.
is the gross margin? What is OpenAI's gross margin? Particularly if they include the cost of building those huge server farms as part of the cost of goods sold. Um, Understanding what gross margin is and what your operating profit and cash flow, these are all important, right, to running a business because you have to kind of
What did you say?
be in
Operating
charge
what?
of it.
Operating what?
Well, yeah, I mean, have this understanding of financials is important.
But
So,
what this is my question, because you said gross margin, cash flow. What are the metrics that you look at when you're like, okay, I want to understand this
well,
company?
the thing I'd like to know is what is OpenAI's gross margin? Where do they put the cost of building those server farms? Do they put it as cost of goods, right? That's like when Apple builds an iPhone, there's a cost of building this and a
Yeah.
price that they charge, and the delta is how they make money. Apple is ridiculously profitable for a hardware company, but its gross margins are most thick. They have blended results now too because they have services. But in the iPhone business, I think their gross margin is like 32%, which is enormous for hardware. Software businesses gross margin is like 90% because the cost of building the software is a very small fraction of how much you can charge for it.
Okay, and that
And
feels okay. Feels like it's going to
and all of
grow.
that
Yeah.
all of that says how much money is available to reinvest in the business and make it bigger and do new things.
So um, this is very relevant for me because yesterday I had a koan, a business koan, a business paradox, where I was like, it goes back to knowledge management. How the hell do you categorize all these things? And you just did a little bit of that yourself there, talking about the gross margin, where they put the cost of server farms. So I have an event that I'm going to go to. That event was expensive, and so I put it into my LLC, and I was like, well, I need to create a new card for this because I haven't paid for an event before. Where do I put this? How do I actually tie this to what the business does? And then I got into a
That's
long,
part,
yeah,
yeah, that's part of your operating costs.
operating costs. Yeah.
Cost of goods sold is what it costs you to make something. In your case, it doesn't sound like you have a cost of goods sold, so you have 100% gross margin. Yeah. So it's a conceptual way
Yeah.
of thinking about the
Yeah.
company, which is fine. You could put your own salary if you pay yourself a salary. You, Nobody would accept this, but you could put that in your cost of goods sold because you're the cost of making your service.
So it's my
Um,
time right now. So I should consider it my time, my freelancer's time, and then all these extra like the SaaS
so let's
APIs.
all see. This is the point, and this is where accounting can actually be useful. Understanding the concept behind it. That's all operating costs. You can't say that's cost of goods sold because there are accounting
Oh,
regulations and what's known as
oh,
GAAP, generally accepted accounting principles. Um, People agree on how
got it.
things are supposed
Okay.
to be accounted for, so you can understand what everybody's saying to you. Um, and in a hardware business, it's very clear what it costs you to make something because you have to
Got
make it.
it. Okay.
A
Yeah. Yeah.
software business,
Yeah. Okay. All
what's
right.
in a
This is
retail business, you buy it. It's not really a cost of goods sold in a retail business, but it's you buy your inventory. There's a capital expenditure, and then it gets translated to the P&L when you sell it. Anyway, so the accounting of businesses is a really, if you don't understand it, and there are many, many people don't understand this, a lot of the socialist firms just have no concept of what this is. So that's relevant to Mondani, and. So
yeah.
it's just important to understand this stuff because it's not a political thing. If you have a generally accepted accounting principle, that's true for the MAGA people as well as for the progressives. But
It's a
this is
principle
a
of
generally
nature. Yeah, this is the funniest thing. It's a principle of nature. I think that capitalism, people create a devil out of capitalism, but it feels like capitalism is just a principle of nature.
Well, no, I wouldn't put it that way because capitalism is a political theory. But even socialist countries have to account for their
Yeah, yeah,
their stuff.
yeah.
One of the things that's true about the U.S.
Socialist
government, just
accounting.
yeah, the U.S. government does not do double entry bookkeeping,
What?
which is all the basis for accounting. So when they
Oh,
spend X billions of dollars on an aircraft carrier, they just expense it the way, know, even if the aircraft carrier is going to last for 30 years or 20 years, but they don't spread that over 20 years. They just pay the money. And so they have cash coming in and they have cash going out. It's like a big sole proprietorship. And,
whoa.
and there's no way to understand how the capital is allocated over time, which is just really weird that the whole government doesn't operate the way that, big companies operate.
So,
They're
okay,
not subject. They're not subject to the generally accepted
is
accounting
Malay doing
principles.
this? I'm looking this right up.
It's
Is
true for
Malay
most
turning
governments
the
because,
argument?
I can't tell you that. I don't know how Arjun,
I'm gonna look it up.
but I don't think any country actually operates the way a business does because it's political.
But this is the crazy thing I'm looking for in my book is that yes, there's a difference between politics and corporations, but as we discussed, the Roman government depended on corporations to save them from the hordes of elephants running, and then they after that, then got really a lot of political influence. And the same with the UK. Most interesting thing about a corporation that I learned: every single corporation, whether it was Dutch or British, always had the national interest. So the crown was like, "You guys are going to make England great for the first time, not again." And so that was the whole thing was like, you guys get this charter from the government, but it's under God and it's for our best interest as a nation. Somewhere along the line, that switched now because I imagine this reason why the state it has the role of giving my LLC and my corporation legitimacy is because the same thing was exist in the United States. But somewhere along the lines, all of a sudden it got abstracted away from the national interest and just became shareholder fiduciary duty.
Uh, yes.
Well, do you think it was Clinton? Do you think it was
Well, I
Reagan?
mean,
Do you think it was
no,
Kennedy?
no, no. I don't think it's anybody in particular. It actually, that's a complicated thing.
Hmm.
But just on a current basis, People's Republic of China is clearly operated by a centralized government
Yeah.
entity, which makes decisions on behalf of everybody.
Oh, interesting.
There's no
Yeah,
no
that's
democratic
fascism.
capitalist. Yeah,
Yeah.
it's not fascism. It is actually almost as pure a communist system as you get because they recognize there's economics to the whole thing, but they're also operating on a great power competition basis. Right, China is outmatching us in terms of its economy, in terms of its military, because it's run by one guy basically, and um, so it's not a capitalist system. They bent the capitalist system to their will, and but it's still authorized by a centralized government anyway. So it's if you try to do it historic, it's like three-dimensional chess. If you're
Yeah.
trying to put history in there and current, um, and my brain's not big enough, at least not early in the morning in Boston, um, to work that three-dimensional chess out.
Yeah. It gave me a lot of insight. I mean, my mind immediately goes to Israel because Israel is the only other modern nation state with that same level of intensity over the national good as China. Uh, yeah, well, it looks like you have a statement. Do you
And I'm scratching my head actually,
have
trying to just stimulate my brain.
yeah.
Um, Israel is a democracy and a capitalist economy.
Mm.
Um, and right now, Israel's a tough topic because even Israelis don't agree on, what they're up to. particularly the military, um, even though it's actually been effective. Netanyahu's not getting full credit for that because they don't like what he's doing in Gaza. But he's certainly kind of
Interesting.
flattened the
You're saying
Hezbollah,
that, yeah. So
and
the
and
heart,
and
yeah, yeah.
and they're controlling what's going on in Syria, and they're controlling what's going on in Iran, but they're getting like just lambasted for what's going on in Gaza.
Yeah, well,
It's
this
like
is
that
what
they could figure out a way to do a more moderate approach to Gaza, they'd probably be looking really good.
well, this is the soft power, hard power thing, and this is the central question of the last week is the we're in the information age now. Guess who has the biggest information age hard power? It's Israel. Israel has the most powerful information age hard power. They also have industrial age hard power, but not to the degree that the United States has. But they are losing the information age soft power game. And I think in the information age, the soft power is really important, and they're losing it big time. At the same time as also very competently expanding their industrial age hard power, like you just mentioned, sending pagers into Lebanon and Syria, establishing leaders in Syria, and like all these different things that are like very competent in the hard power. And that goes back to the national good. They definitely have a very, very strong understanding of the national good. Man, it's so interesting. We just opened up a whole bunch of can of worms. Let's put the Israel part away for the next 10 minutes and talk about. Oh man, I want to go back to that investing conversation because I was personally learning a lot about that. Let's go into the history. Let's go into what didn't you know, which you wish you knew when you were starting in 1997 about investing. So now that you know a lot more about the investing, what do you think like you could have done better or worse in the 1997, 1998 area?
Timing is everything.
Timing is everything. Yeah, better timing. But that's like,
Well, no, I mean, uh, I started in late 96, so 97 was my first full year as a VC. Um, there were companies funded in 95 and 96 that I just wasn't an investor. And but I paid a lot of attention to them because I could see that they would be important. And
you remember what those were?
one of yeah, I mean, like Netflix,
Yeah.
Amazon.
Yeah.
Um,
Yep. Got it.
they were all funded in that period in the 90s. Um, and obviously they've evolved over time, but you know, um, the guy who did Netflix, Jay Hoag, I think his name is, and the guy who did Amazon, John Doerr, were already venture capitalists and operating in the domain. And I mean, there are plenty of others too, but um, having money when the opportunity presents and then
Interesting. Yeah.
taking the action to invest is the whole game.
Yeah.
Right. So you have to be hyper aware of what's going on and be able to spot companies as they're just getting started. And there may be more than one. You have to pick the right one. Um, in journalism, my job was to cover everything. Right. And so I could give you opinions on anything, and I knew everybody. Right. That was my job. Becoming an investor is a whole different game. It took me a while to pick that up. And I got TiVo, which was not my first deal, but close to my first deal, handed to me because the founders had come out of Silicon Graphics, which NEA had funded. So the partners at NEA knew the people at SGI. Funny, SGI, that was their public trading symbol, and now another company has taken over that symbol, and it's in the mattress business.
So I got a question I want to interject there. So politics, what was, because we talked before on the show about how you got fired because of headbutting. So I don't want to talk about that because I already know that pretty well. Although listeners, if they want to understand, go back to the early episodes. So headbutting politics inside of a VC industry. What are the things that were the hardest lessons when you immediately got in there, naive, like just like all these human relationship sticky problems of these investors who have been here for a long time, know how this game works, and then a newbie coming in and just not knowing it, like what was going on there?
Well, I worked for a firm with a lot of partners that had
Okay.
been around for 20 years at the time. So I walked into an existing dynamic in that partnership. That's part I'm not very good at, right? My sort of immediate
All the different,
surroundings right now.
yeah, all the different, you got like 25 people, all of who have different relationships
Well,
and different.
there were 10
Uh-huh.
general partners and a bunch of other people. So
Mm-hmm.
it's, um, and um, it all looked good to me because I became a general partner very quickly. With my first deal, made money, and well,
Oh,
um, the so um, so I qualified very fast for becoming a general partner, and so then I was inserted into the general partner group after 18 months, and um, I really didn't understand that. That took forever, and that took until I was fired to really understand it, because
what
I
did you
kind of
not
believed.
understand? What did you
Well, I
not
believed
understand?
the bullshit,
Yeah.
and
Oh,
the
yes.
bullshit was not what was true.
Yeah.
So that's naivete. That's being naive.
Yeah.
Um, all of the lessons of which I learned well enough that when we formed Alsop Louis, we've done a pretty good job.
Ooh.
Um, the um, so uh, so venture capital is a business and it has its own dynamics and it's
Mm.
different than companies. Um, it's not a shareholding; it's a limited partnership, and um, the so the dynamics of a venture capital firm. Um, there's stuff I could observe because I'd been knowing about them for the previous 20 years, um, but the details of it are tough, and you have to understand those. And so, I mean, at NEA, it was like all general partners shared equally in the profits of the firm.
Oh.
One for all for one
Whoa.
was the idea. But it turned out there was kind of an inside group of general partners
Yeah.
who
Yeah.
really ran the place,
Yeah.
and they started firing people. That was the second, third, fourth one to be fired. Um, and that created a winnowing process where the general partner group changed quite dramatically in the space of 2 years, which I only realized afterwards, after I'd left. And and that appeared to be intentional. It was an inside group that planned the transition in the general partners. Um, Probably appropriately. I mean, NEA now has $3 to $4 billion funds, and instead of 8 or 9 or 10 general partners, probably has like 16. It's a much bigger business, and they probably did exactly the right thing. I didn't scale with that, and so thank God they fired me.
So the scale, and I think it's the same thing that I got in my understanding of a scale up startup, was that I want nothing to do with that level of human dynamics of the pure mechanics. Cause it's like, this is the hard thing I've understood about bureaucracies, is that they turn into machines themselves. You're creating machines and you're also turning into a machine as you get a larger
Uh,
company.
and there's a very interesting side trip on that. If, if the American government is a bureaucracy,
Mm.
no one has been able to interfere with its growth,
Yeah.
where it's growing itself, right? That its self-interest is preserving itself until Trump came along.
But
Right.
as you may know, we've probably talked about it. I don't know if I've told you, but I voted for Trump. I voted for Trump for one issue. I'm a single voter issue. It had to do with COVID stuff, and and that's related to other things. And I'm now not a supporter of Trump because he didn't do the thing that I wanted him to do, which was the deep state. The fact that he said, I think now Trump is captured by the deep state. Like, I don't think he's separate
I
from
think
it.
he's created it and is running it.
He's
I think it's
he
more
took
mendacious than that.
he took control of the deep state and turned it into his own thing.
Yeah.
Interesting.
Yeah, I
Whoa.
mean, and he's not shy about it. Doesn't say that explicitly, but the
Interesting.
fact that his boys are running Trump organization and doing all the things that he's setting him up to do, I mean, it's intensely corrupt.
That
That's
is an
part of why
interesting.
he's getting a little pushback from the MAGA people, because the MAGA people are beginning to
Yeah, yeah, with
understand
the
that he's
Epstein.
not
Yeah, yeah,
working on their
yeah,
behalf; he's
yeah,
working on
yeah,
his own behalf.
yeah, yeah. Oof.
Which is the scary part, because our whole country's being kind of torn apart by a competition between Trump and his MAGA base. Everybody else is irrelevant.
Whoa. That is a big one.
So I
Uh,
said it's not a small side trip, but
yeah.
I mean, at some level, you have to say, well, okay, if Trump is king, right, and he can make everything happen, and he keeps being king, he could do a pull a Xi Jinping. Maybe he's doing the right thing.
Well,
It's just that all for all the wrong reasons.
and this is what Curtis Yarvin. Are you familiar with Curtis Yarvin?
No,
So Curtis Yarvin is a political theorist who's become. He started Urbit, and you know that I've become interested in Urbit over the years, not for the reasons that Curtis Yarvin, but he comes attached with a giant political philosophy, and that political philosophy talks about the patchwork age and sort of the feudal neo-feudalism. We're returning to neo-feudalism. Yarvin has become popular because of his connection to Thiel, and so he's become popular among the elite Trump, not the MAGA base that we were just talking about, who now feels very betrayed. Bukele in El Salvador, to a certain extent, Malay
who just
as well.
nominated himself as king.
Yep,
Yeah.
yep, yep. Well, I mean, so it's interesting because he did the same. He's doing the same thing that FDR did. So FDR also didn't have any term limits. After FDR, they instantiated term limits because of what FDR represented as a threat to the executive in our
There were
country.
term limits actually previously. It was only supposed to be 2 terms, but because it was the middle of the war, they made an exception to the rule.
Yeah, but regardless,
No
so
one's made an exception to the rule since then, but the
yeah,
precedent is FDR.
okay, and so but Trump's not going to make it that long unless radical life extension is changed.
Yeah, I
But
know. Yeah,
you've got
thank God.
Bukele there, and then you've got Malay to a certain extent is also doing this. I know that Malay is intentionally creating an imperial aesthetic.
Hmm.
And so all these sort of right wing guys are basically figuring out how to establish their kingdoms out of the wreckage of our republic. Um, but I'm always an optimist. Like I think the U.S. can still figure it out. Uh, but it's interesting. May not
We
have time
agree.
to. Yeah, yeah,
We agree. No, I mean
yeah.
it's. Um, did you watch Kamala Harris interview with Stephen Colbert
No.
night before last? So today's
Mm.
Saturday. It was Thursday night, and I watched it. It's on YouTube, so you can watch the whole thing. And if you want, I can send you the link. But it's like she's written a book called 107 Days, which is how long she ran for president. Um, and uh, the sort of constant thing is like, okay, if Trump is doing this and he's going to be king, and he's like planned on this for he took 4 years to figure out Project 2025, um, even though he declaims it. And uh, how are the Democrats going to respond? Because they clearly didn't have their shit together, right? And she is the marker of that. So you listen to her about, and she didn't want to run for governor, and she's written this book, and it's supposed to be a journal and kind of bring everybody along with her on the whole journey she went through. Um, and she doesn't address the central fact, which is kind of an nincompoop and doesn't really have a good point of view. Um, so that's not the solution for the Democrats, and
Yeah,
Buttigieg is not the solution, and this and that. There's no solution. There is not a solution to the Democrats
yeah.
that's going to effectively compete with Trump's control over MAGA base,
But
regardless of
but
what
not as a
happens with that.
Fisher.
So,
Yeah.
so that means they're not going to do it in the midterms. They're not going to do it in the
Yeah.
new in the
Twenty.
28.
Yeah.
It's going to take them generations to figure out how to respond to this, which is what leaves Trump to do whatever the heck he wants to do. You have to have two functioning parties in our system. And parliamentary systems, it's two coalitions of parties. and ours is two actual parties. And all the rules have changed. And so it's hard to see how the Democrats are going to bring it back into balance. And it's their fault for not losing it, right? They went too far in one direction. So nobody trusts them. Like the Wall Street Journal just did a poll to the degree that you think polls are useful, where it tracked, and it's been doing it long enough that it's tracked the favorability of the Democratic Party, and it's never been this low.
Yeah.
Right. The favorability for Democrats is like 24%, something like that. How do you go from 24% to more than 50% when you lost it over a period of 20 years? It's going to take them another 20 years to figure it out. So this is actually the real threat to our democratic system, is that Trump's just taking advantage of
There's no contender.
how badly fucked up the Democrats are.
There's no contender. Okay, well, I love our geopolitical and this time domestically political tangents, but I think that's enough for today. So tune in next week
I think so.
for Stewart Squared, and make sure to subscribe on YouTube and Spotify.